It's Monday, the 27th of August 2012, and in this Boardroom Talk special podcast, Grattan Kirk, the Chief Executive of the JD Group, joins us. A much enlarged JD Group with this set of financial results. It's for 10 months to the end of June, and that's because you are aligning yourselves now with your new controlling shareholder, Steinhoff. Just break it down quickly, what how the group is, or how the revenues are split.
Yes, it's quite difficult to unpack the 10 months against 12, but as you said, we changed our year into June from August. So the unpack is roughly 50% of the business is Unitrans Auto. So from a turnover point of view, that does just over 12 billion rand a year. The furniture business about 6, the 3 cash businesses about 5, and then we've got obviously our financial services business that does about 3.5 billion rand a year. So
and
the total,
bottom line numbers?
The bottom line numbers, out of financial services, we generate about 45%. Furniture retail is about 20, motors about 25, and the cash business is about 10.
That's interesting, Grattan. So you're actually a financial services business masquerading as a retailer and selling some cars.
Well, you know, we're
selling a lot of cars.
Well, we're selling a lot of cars, yes, admittedly. But I think the whole strategy 3 years ago was to diversify our retail footprint away from a pure play furniture entity. So we needed to add additional brands to that, and that was obviously the Incredible Connections and Steinbuild, which is Penny Pinch's Timber City, as well as the Unitrans Auto business, as well as diversifying our financial services entity, which is really to try and augment our furniture insurance offer, our furniture lending offer into personal loans and the like. So
you started there,
yeah,
quite aggressively.
Well,
we've are these unsecured loans?
These are unsecured loans, up to a maximum of 24,500 rand. But funny enough, 75% of those loans are to our existing customers. So the reality is we lend into our existing customers who've had a history with for many, many years. And out of that, we found strong demand, and now the book is just short of 1.3 billion. So we've had a very strong run into with personal loans, and our furniture business the last 6 months also improving nicely.
Strong demand, but are they repaying?
Oh, you'd really have to ask David, because he's the one who's gone back so many years. He'll tell you the book is never been in as better shape as it is in 2012. All the hard work in around the structure, the foundation, the understanding of at a very scientific and exact level of credit granting and collections, that's in place, and we have a fully fledged consumer finance business, and we're confident in lending, and our collections are as high as they've ever been.
So almost half your profits now coming from financial services.
Yeah. Look, it's always been a very strong revenue and profit generator, and we've got over 1,000 furniture stores and a couple of hundred other retail outlets. And that for us, that's a huge advantage, enabled in access to the customer, in ability for the customer to engage with our brands and our lending. And from that point of view, we have been able to keep a lot of our customers who traditionally in the old may not have taken out a personal loan from a furniture retailer. And we have very strong brand equity built up over many years. And there's a confidence there from a customer point of view to lend.
I was only half joking when I said that you're a financial services business masquerading as a retailer of furniture and cars. But if you put it the other way around, one of your competitors, Ellerines, was bought by a African bank, by a financial services business. You've got family ties through Steinhoff and PSG with Capitec. Is there any intention of ever getting closer to them?
At this particular stage, not at all. No, we've got a very strong focus on financial services. It's a very, very big part of our business, and we're firmly forging ahead with our own financial services business. And we see, the work that we've done and the sort of heavy lifting that's taken place over the last 3 years is really starting to deliver strong earnings and strong shareholder value. So no, not
at this stage.
Well, I think there's lots to go, Alec. To be honest with you, I think we really only started launch personal loans in early in the new year. So from January onwards, at the moment we're extending nearly 200 million rand a month to our existing customers in a personal loan format. So we don't see any reason why that to stop. And our knowledge of the customer and our ability to augment the product, the lending product and the insurance product into our target market is all goes well for the future.
How do you fund that?
Well, historically it was all with equity, but you'll see in the presentation today we've taken a concerted effort to raise gearing. We did a 1 billion rand in a corporate bond earlier in June, And the next 6 to 12 months, we'll raise another $1 billion or $2 billion in order to fund that in the local debt market.
So you're borrowing at wholesale rates and then lending out to your customers at retail rates.
Sure. Yeah. Well, I mean, the big benefit of the JD Group is that with our footprint, our 1,000 stores, we have touch points across the country with all our customers. So what you really are is using your retail footprint to extend loans.
You mentioned David earlier, David Sussman. Some time back, he was bemoaning the death of the rural areas and the fact that JD were closing a lot of stores in those areas. And I see this time round you've actually been opening stores in the rural parts of the country. What's going on there?
Well, it's really an opportunity to bring a slightly smaller format furniture business to the rural market. There's a lot of new towns opening up. Funny enough, there's a lot of places where we're not represented. And we see an opportunity to use between the 300 and 400 square metre footprint. Our normal footprint's about 500. There's a slightly smaller format. It carries the same sort of range as a bigger store. And we use our central distribution to be able to procure and supply into that target market. And the rents are a little bit lower and you don't have as many people. And the trading densities are a fair bit higher than our let's call it our traditional furniture store. So it is good business for us. And we see opportunity there.
New towns?
Yeah, I mean, places like Christiana and Wommeranstadt and those sort of places is where we haven't been traditionally represented, and small little malls creeping up 10, 12,000 square metres where we didn't have a footprint historically, and we're opening stores successfully there.
And what's happening in those areas to create rejuvenation of those towns?
Yeah, I think to be fair, there's quite a lot of money flows from the urban areas back into those sort of rural towns where the family are remain behind, and we do a lot of deliveries. For example, a business that we do in an urban area, which is delivered into a rural area, and I think there's quite a lot of people making a living in those rural areas from many areas.
I suppose you've also got social grants. People who had nothing in the past are at least getting some income.
Social grants and pensions are a fairly big part of that of our business there.
Mm. It's interesting to have a look at where the JD Group is today, because in many ways, take out your financial services, you're a conglomerate. Mm-hmm. You're selling lots of different products, from timber to motor cars to clearly the furniture itself. Have you been a supporter of the conglomerate idea, given that you come from technology, highly focused, incredible connection background?
Look, going back to 2008 and 2009, it was evident that had we not diversified our retail footprint, there was some concern that the banks would start to engage with our customers more aggressively, and therefore we needed to diversify away from just a furniture and appliance retailer for all intents and purposes. And that if we didn't get a bigger retail footprint, the sustainability would have come under pressure, in our opinion. So we needed to get a more pervasive, diversified footprint away from pure furniture and appliances. And hence our objective at the time was to try and load additional footprint, additional retail brands onto our existing, and effectively those businesses trade. They're almost listed companies inside a listed company, so they run very autonomously with their own boards and their own audit committees, etc. So that's the way we want to structure the business, and we want to introduce obviously lending into that retail format in order to provide, if you effectively like, the lending is the glue that holds the retail offer together. Well,
so far it's gone gangbusters. The revenues are up strongly, the profits on a directly comparable basis up 22%.
Yeah, look, it's been 3 hard years, Alec, and we have the foundation in place. We've obviously put in place an entirely new ERP system, new centralised logistics. So the sort of heavy lifting and heavy spending has been done.
And it's all working, the computer systems.
Oh yeah, it hasn't been without. It's like hauling the engines off a Boeing at 30,000 feet and putting them back on. But it's been stressful, but it's in place now. It's working, and we're very pleased with the outcome. And as far as we're concerned, had we not done that, the platform wouldn't have been in place and the foundation wouldn't have been in place. So we're very comfortable where we are now. Business is good, and we're pretty optimistic.
And life under Steinhoff?
Very little change, actually, to be honest with you. I must say they've been great shareholders. We've been they're very active in terms of looking at opportunities for us. Global sourcing is another. Looking at the brands that they have and seeing as there are opportunities in South Africa. So we have a very strong relationship, and they're very supportive. And so far we've been owned since since about April, and we're pleased with the relationship. I mean, for example, next year we'll import some 300 million rand of furniture through Global Sourcing, which is their business in the East. We wouldn't have been able to do that before. That provides additional product, additional margin opportunities. So yeah, that's good from a JD shareholder point of view too.
Where's the big opportunity for you, Grattan, given now that you have these different areas that JD Group is focusing on?
We see very much from a furniture point of view, just doing things much more efficiently, targeting the customer, stock availability, delivery on time, making that unique selling proposition, actively engage with the customer from an art of service point of view. So very much a much improved retail footprint, growth from a store point of view as well. On the cash side, Hi-Fi Corporation and Incredible Connection is a tough business. Margins under pressure with commoditization and price deflation on a product level. I'm very excited about the opportunity at Penny Pinches in Timber City, because that presents a rural opportunity for us. It's somewhat similar to our furniture business, and to provide a sort of a consumer finance offer, a lending offer into turning your house into a home. Motors, it's all systems go. I think we have we're looking at a number of strategic acquisitions to bolster those the dealerships, and then the consumer finance side. Growing our product and channel and offer from a lending point of view as well from an insurance point of view. So I'm excited, Alec. It's been 3 tough years, and it's a far cry from selling computers, I must tell you. But it's each of the businesses run very independent. They've got their own boards, they've got their own management teams in place. We obviously cross-pollinate between the lending business and the retail business, and that works very well.
But it sounds to me like you're ready to do an Africa expansion strategy.
Well, we've just opened Hi-Fi Corporation in Lusaka. It's one store. We've got representation in Botswana and Namibia. Depending on site availability, we'll be in Ghana. We're looking at Mozambique. We've been to Angola and Nigeria, but they're some way away, I think, for us. The furniture offer is largely dependent on a consumer finance or a lending. You need to go into that country with a lending offer at the same time and build a book. And that takes a little bit of time. So I think for us it would be looking at a strategic acquisition in those countries, and from a furniture point of view.
You've had a good few years now as far as the bottom line is concerned. Are you expecting that there's still momentum?
Don't forget that 2008 and 9 were tough years for the group. On the back of 2005 and 6, where we had very strong growth.
We've had 10, 11 and 12 now.
Yes, we've had, it's 3 years of over 20% effective growth in headline earnings, and that's what we said to the market. I think there was some skepticism about accumulating all the assets and putting it all together, and on the back of the large write-offs in 2009 and the like on the post the NCA. But we've produced solid results for the last 3 years, solid cash flows. Our balance sheet's fundamentally, Alec, different to what it was in the past, and so building blocks are very much in place.
But the momentum, is it still going?
We've got a very positive, internally we have a very positive, we've used to say, look, when is all the good things that we're doing around here going to start catching up and seeing itself in the income statement? And these results are sort of, or recognise the effort that's gone in over the last 3 years for all the people, from the IT guys to the retail teams, plus what's on financial services, and they're flowing through to the bottom line. So yeah, I'm very in a good space.
Grattan Kirk is the Chief Executive of JD Group.